Hey, what's up, guys? It's November of 2022, and we're already approaching the end of the year. You know, yesterday was Halloween, and we're getting ready to enter into my favorite part of the season with, Thanksgiving and Christmas. So there's a lot of stuff going on here in November, right? This week alone, the Fed is meeting to decide, how they're going to combat inflation and what they're going to do with rates, and are they going to shift their tone from aggressive or being less aggressive? And that's going to make a huge impact on, the world economics. In addition to that, we have the midterm elections coming up here middle of this month. There's a lot going on. So today we're going to go over seasonal trends and what that should say is going to happen over the next 90 days. And then at the end of this video, you're going to want to stay tuned to that because we'll take a step back, I should say, and go over the macroeconomics, at least as far as how it applies to San Diego. But we'll see how all that stuff plays out, given the fact that this month is going to be super volatile depending on what happens, politically speaking. By the time you watch this video, things could be radically different. So if you want to talk to me directly about what's going on in the current housing market, based off when you need that information, and you're not looking at outdated information off this kind of video, feel free to reach out to me. I'll share with you how to connect with me in just a few minutes. But before we get into it, if you want to keep up with everything about San Diego real estate and our housing market, then just make sure you like and subscribe to our channel. And don't forget to hit that notification bell. Hey guys, my name's Jesse Morrison, and we offer a proven and repeatable home sale process that's backed by client results, adding up to 18% more money to your bottom line than traditional real estate agents. If you would like to protect your family and your finances through the home sale process over the coming months, then just make sure to visit the link in the description below and apply now. Okay, so one thing I like to track is, how many homes that come to the market fail to sell. And this chart shows you exactly what that is. It says right here that 21,653 homes came to the market and either sold or for one reason or another didn't sell. And of those homes, 5,246 of them failed to sell. Okay, so if you divide this 5,200 by the 21, you get 24.2% of the homes that come to the market fail to sell. That's a pretty big number, guys. Like, imagine 1 out of every 4 homes that hits the market doesn't sell for one reason or another. So I was wondering, how does that look like, the previous month? We were at 22% of the homes failed to sell. The month before that, 19.9% of the homes failed to sell. And if you go back a few more months to like May of 2022, 14.2% of the homes back then were failing to sell. So I don't know exactly what that means, other than the fact that homes are increasingly or at a higher frequency not selling for one reason or another. Okay, so this graph here indicates how long it typically takes to sell a detached house here in San Diego County. So what I want to do is explain to you exactly what this graph means and how we can read it, because all the future graphs that I'm going to be going over with you in this video are very, very similar in style. Okay, so right up at the top here, we talk about what the graph is titled. It's the median market time. And then over here on the left-hand side of the graph are how many days it's taking to sell a house. And then along the bottom is time, the duration of time. So this is a 5-year chart, all right? And what I've done is in green arrows, that's the trend that I've uncovered for you guys that I want to show you. So the green arrows are the seasons of January to June. Okay, so every green arrow represents January to June. So that's January to June of 2017, January to June of 2018, 2019, 2020, 2021, 2022. All right. The next thing you want to see are these yellow graphs or these yellow bars. These yellow bars are indicative of a 90-day window. Okay. And the reason why we want these yellow bars to pay attention to these yellow bars is because these are from November, December, and January, right? We just entered into November. So we want to use this insight to see what exactly is going to happen in the next 90 days, according to what the trends are telling us, okay? So what you're going to see here is that in January to June, homes typically sell faster and faster and faster as we approach June. And the opposite holds true, right? So as June approaches the following January, it takes longer and longer and longer to sell a house. In November to January, it looks like we are getting into the point where it's going to take the longest time to sell a house. And that's okay. You know, that's just the nature of this season. But you can see here, like, look at this. It's normal for homes to take longer to sell. So as we are seeing market time, you know, grow and grow and grow this season, don't be scared, because that's what should be happening. Okay. So where are we at today? So right now, it takes about 22 days to sell a house. Okay. Over the past several years, we've been hovering in this like 12 to 30 day range. All right, so this graph here indicates, you know, what buyers will be willing to spend with relationship to the listing price for detached houses in San Diego. Basically, it measures how aggressive buyers want to be. So on the left-hand side of this graph, there's percentages. And then again, this is a graph over time, over a 5-year period of time. So what we're going to see is that if a home was listed for like $1 million and buyers were willing to pay more than $1 million for it, then the graph would stretch above 100%, because that would tell us that buyers are willing to pay more than what the home is being sold for. And then as the graph goes below 100%, that means sellers have to negotiate down on the price. And as you can see, from January to June, using these green arrows again, prices or buyers get more and more aggressive as January approaches June, right? They start paying more for the house, all right? And then as June approaches the following January, look, sometimes the aggressiveness comes down, and sometimes it kind of just levels out. This one came way down. And look right here, we are seeing buyer aggressiveness drop off a cliff, right? But what was interesting is that just this last month, we actually hovered in the same 97% mark that we did from the previous month, which is really encouraging. So that means we're kind of bottoming out. So we're in the middle of this cycle where buyers become less aggressive in the months of November to January, and we can expect to see buyers be less to least aggressive over these coming months. Okay, so what this graph does is it tells us what seasons values typically go up or come down or remain sideways, right? And what we're seeing is that, again, in January to June, in these green arrows, that's when prices typically go up. And then from June to the following January, that's when things usually level out. Or sometimes they go down a little bit, right? This year was different. From 2020 to 2021 was an anomaly. It was just going up all year round. And I think maybe 2022 might be another anomaly in the opposite direction. We'll have to find out. But with a $885,000 median price point where we're at currently, at this price point, we're at the end of a moderating to slightly declining, you know, cycle in the months of so in the months of November through January, we should see home values, you know, drop down to their lowest level for the year. Okay, so let's take a step back and kind of take a more bird's eye view of what's happening in San Diego as a whole with regards to supply and demand. Okay, are we in a buyer's market now, or are we in a seller's market? And how do we know? If you can see here on this graph, I've marked buyer's market in red and a seller's market in green. And how we measure this is based off of months worth of inventory. So basically what this says is if there's 100 houses for sale currently right now, and on average 25 houses sell every single month, it would take 4 months to deplete that inventory down to zero, assuming that no other houses came to the market. All right, so on the left-hand side of this graph, we see how many months of supply there are. And then this is a graph over time since 2005. So how do I know that this 6-month mark is the magic number where when the graph is below 6 months, it becomes a seller's market versus above 6 months being a buyer's market? So that's a question I'll answer in the following graph. So this graph is in direct correlation to the one previous, right? So what I've done, these are home values. This is the median price point, right? And what I've done is I've taken, look, everything that's in green. So when months of the inventory are below 6 months, I've highlighted in green, and same here on this graph. So when months of inventory below are in the green, values climb, right? And when months of inventory are in the red, I indicated that here on this graph, you can see that prices come down. Green, they go up. red, they come down, and we've been below 6 months worth of inventory all the way since 2012. And you can see, as long as we stay under 6 months, values are going to continue to go up. And right now we're at 1.8 months of inventory, which tells us that we're in an extreme seller's market, even though we've been seeing prices come down. And it doesn't feel like a seller's market because buyers have a lot more control than they normally do, or than they have had in the past couple of years. Until we reach this 6 month mark worth of inventory, we will be considered a seller's market, and prices will continue to go up overall. But what drives inventory? What's going to make inventory go up? And that has to do with this graph here, and that is affordability, right? As interest rates have climbed recently, like they're in the 7% now, buyers can't necessarily afford to buy homes even though they want to, right? Values are based off of two things, a buyer's willingness and ability to buy. Buyers are still willing to buy, they want to buy, right? Rents are crazy high, and they're more messed up than they're more messed up than home values. But even though buyers want to buy and get out of the stress of rent rates going up like crazy, can they buy? Are they able to do it? And that's where the struggle comes in, right? They might be willing to buy, but to qualify for a mortgage, they're not able to, at least not at these prices and this interest rate. So what this graph does here is it tells you, based off current rates, current household income, current values of homes, all these different factors, what is the percentage of the population that can afford to buy a house? And you can see that there's two graphs here. There's one for California and there's one for the United States. This top graph, the green one, is the United States, and the silver graph indicates California. And what you're going to see is that right now, well, this graph is old. This is outdated. This is from Q2 2022. This is the most recent statistics that they have. So I apologize. These numbers are probably worse off than they were when they did this. But at this time, 38% of the United States population could afford to buy a house. That's not very good, especially when you consider that it looks like it ranges in this, it averages out right around here, which would be about 60% of the population. And the California is even worse, guys. Look, it says 16% of California can afford to buy a home. So where were we back in 2008 when the market crashed? Here it is. I've indicated in this red line here, and you can see that right now we are less affordable in the United States than we were even back in 2008. In California being at 16%, in 2008 it dropped down to like 12% or so. So we still have a little bit of room for California to become more expensive or less affordable, however you want to look at it. But like I said, these numbers are outdated, so we could very well be at this number already. Okay, so all that to say is there's a lot going on, right? There's a lot of stats, there's a lot of graphs, there's a lot of unknowns. But how does that affect you when it comes to either buying or selling your house? I don't think you should be making your decisions based off of historical trends or what the next guru is going to tell you that home prices are going to do. I mean, it's good to be educated, but don't make that your primary decision-making guide. Okay, you need to be deciding what you truly want in a home purchase or to sell your home. What is your core motivation? What is driving you to make this decision? If buying or selling your home gets you the results that you need for your particular situation, then do it, guys. Don't wait for some random person to tell you that the market's going to go up or the market's going to come crashing down. Nobody knows. And I want you to make sure that anybody that tells you otherwise kind of run in the opposite direction. We can look back at history, we can look at these graphs, and we can kind of decipher these graphs and create an opinion of what might happen over the next 90 days, like what I've done in this video. But the reality is we can't drive forward by looking in the rearview mirror. So look, I hope some of this information was helpful, or at least it caused you to think about, what is important to you. And if anyone you care about could benefit from this information, please just make sure to share this video using the share button below. Again, my name is Jesse Morrison, and we offer a proven and repeatable home sale process that's backed by client results, adding up to 18% more money to your bottom line than traditional real estate agents. If you would like to protect your family and your finances through the home sale process over the coming months, then just visit the link in the description below and apply now. Otherwise, if you're just looking for more information at this time, I strongly suggest that you check out the next 2 videos that we're going to be putting up on the screen, because they are the videos that YouTube thinks that you should watch next. Thanks so much for watching, and I look forward to helping.